Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca. He invented the Inc. Canadian Insider Index, which is used by the Horizons Canadian Insider Index ETF. A 2017 and 2018 Fund Data Fund Grade A Plus award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Well, thanks for having me back, Jim.
Ted, the TSX today, as we speak, set a new inter-day high. Does this tell us that the Canadian stock market's a good place to be, or is it just a riskier place to be?
Well, every stock market has a lot of risk with it, and the Canadian market has its own particular risks in that it's more geared towards the global economy than, say, the S&P 500. However, given the rough ride that the global economy has gone through, certainly in the minds of investors over the past year or two, a lot of that bad news has been baked into the cake, Jim. And so I think what we're seeing now is some people bringing their short positions, and I mean short, either absolute short, where they've shorted Canadian stocks, or they just don't have enough exposure to it, edging back just in case the global economy is not on the ropes, as maybe was feared even a few months ago. And I think there's a couple of factors driving that. One is that the Fed has reversed course and is now contemplating more rate cuts. I think that's still an uncertainty. I don't think the Fed instills a lot of confidence in investors at this point. However, as we talked about in the spring or late spring, I believe, or early summer on this show after the G20, Europe is starting to make some policy moves, and we had Mario Draghi do a little bit of interest rate cuts, brought back some QE today. There's a couple of interesting things about that. One, I think he was just kind of sort of treading water here, trying to move to the shallow end of the pool a bit until Christine Lagarde is ready to dive in. And she is going to be the new ECB president as of November 1st. What's interesting is, of course, as we also talked about on this show, but Ursula von der Leyen is going to take over as the that's the European Commission president on the same day. Why is that important? Well, Ursula von der Leyen is a German, and that means the Germans are going to be working with Christine Lagarde, who is from France, to try and stimulate the European economy. And we haven't really seen the Germans take that kind of a leadership role in the past. Now, technically speaking, the European Commission does a lot more than stimulate economies. I mean, I think you can make the case that they probably are anti-stimulants, given all the red tape that they slap on their economy. But I think Europe has their eyes wide open here with the European leadership in terms of the issues. They've got new leadership coming in. So I think markets are starting to talk about that more. We talked about it a few months ago, but now I think it's getting into the mainstream. And people who have been really down on the global economy are starting to rethink. And the other risk to the bearish case, I think in the short term, because I don't think it's a huge deal in a medium-term context, but in the short term, if there is a trade deal, then that would give markets a bit of a boost. Now, what I mean by that is that I think the challenges for the global economy, Jim, go well beyond the trade war. Okay, so if we get the trade war out of the way, that's a plus, or it takes away a minus. Let's just say, I don't think it's going to stimulate a lot of growth. Okay, but it takes one of those risks off the table. But we'll see. I think even last week or 2 weeks ago, I suggested I didn't think there would be a trade deal. I've actually changed my mind on that. I think Trump now is showing a bit more, sending a bit more signals that he wants a deal. And I think the Chinese have now finally figured out that, hey, if we get something from Trump that we can live with, we should take it, because looking down the road, the Democrats aren't going to be any more friendlier to China. I think the Chinese are starting to figure that out. And so if they can get a decent deal from Trump, I think they'll take it. So it'll be interesting. We could see some positive developments, and you'll see a lot of volatility in the markets, I think, between now and sort of middle October. So we'll have to see how that plays out. But I'm a lot more positive on the possibility of getting a trade deal than I was even just a few weeks ago.
Well, some of the signs, China says it wouldn't put retaliatory tariffs on some U.S. goods. Trump today saying he would delay the implementation of new tariffs by 2 weeks. Are those the positive signs that have changed your outlook?
Those are confirming it, and just a number of analysts I've listened to, I think, have spelled it out pretty clearly what the stakes are for both sides now, and we're getting closer to an election. So I just think that there's, the two sides are getting to know each other better after this. I think things really got started December 1st of last year. I think that's our kind of our benchmark for when the trade war really started. That was the weekend there was a dinner in Buenos Aires between Xi and Trump. It's also the weekend that Meng Wanzhou was arrested in Vancouver. So that's really, I think, when things got cooking on the trade war front. So they know each other a lot better now, the two sides, and I think that there's a window for a deal. Now, look, if we don't get it in October, then I think you've got the recipe for a potential volatility event in the market place. So the stakes are pretty high on that from a market psychology point of view. But look, the big elephant in the room is that huge amount of debt in the global economy, and there's really only one solution that policymakers can turn to, and that is more inflation. So we will see what Christine Lagarde has up her sleeve, and we will see if the Fed finally, gets around to doing whatever it takes to get inflation up to their target. Because for the most part, they've just really just played lip service to it. We'll see if the inflation doves in the Fed win out. There's I think a civil war going on within the Fed right now, and there's some signs that the inflation doves, those who really want to boost up the inflation rate, are going to win. We will have to see that at the next Fed meeting. So it could be all very interesting. It's not a time I think you want to be short the Canadian market and too gloomy on it. However, if the trade war resumes in November, well, then that's another story. But we're not there yet. In the meantime, I think every step that policymakers make to reflate the economy, get the trade war off the headlines, is a positive for the Canadian market.
We'll have more with Ted Dixon right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Ted Dixon. Ted, do you expect the excitement over gold and silver to continue?
Well, the gold story's not over. We've had a couple of weeks of weakness here, but in our top 20 Inc. stock report for September, top 40 for September, our gold top 20 is coming out next week, but the top 40 for the market, which we published in the first week of September, there were 21 gold stocks out of 40 stocks on the list. So my slip on the top 20 was because over half of the report was filled with gold stocks. I've never seen that before. So there's underlying strength in the gold group. The gold is back. Gold stocks are back. Yes, they've had a pullback here. But what's interesting, Charlie McGillicott over at Nomura Holdings has suggested that, the second half of September, could see a return to volatility in the markets as, buybacks kind of ease in the U.S. And so when you have that support for the market going away as they get closer and closer to their earnings season, which, at the end of September, so it becomes harder and harder for these companies to trade their own shares, you could see volatility pick up again in the market, and that would probably be good for gold. So let's just hang on here and wait another week or so, and we'll see what happens. But, our indication is that gold stocks are back. And look, it's that our top 40 report's a great source of names. And by the way, if I can just put a plug in here, we do have a sale going on, Jim, at CanadianInsider.com. You can join our research club for a special rate. Sales on beyond until the end of the month, so your listeners can check it out and join us at a reduced rate and take a look at our top 40, and then also our top 20 gold list will be coming out next week as well.
We'll have more with Ted Dixon right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, President Trump made headlines a few weeks ago saying he expressed interest in buying Greenland from Denmark. One of the reasons being Greenland is full of rare earths and it would make the U.S. less dependent on China for them. But another country, apparently I saw in a report, that has the most rare earths on the planet is Canada, but we don't have any rare earth mines. Is that something people should look at?
Well, Jim, if we can't get pipelines built, I'm not sure we're going to be able to get rare earth processing facilities built that easily. Now, I haven't looked at that issue too closely, but the big problem with rare earths, as far as I understand it, is not so much the mining, but the processing, which is kind of an ugly industry. When I mean ugly, I mean environmentally. So I wouldn't hold my breath for that. But I'm open to hearing the case where it could be done. I mean, I'd like to see it done. I think it would be great. But, the timelines to getting these facilities up, is quite long. And China, they're pretty cunning when it comes to that business. So if they decided that they wanted to maintain their market share, they could flood the market at a time of their choosing to really make it uneconomical, just as you're starting to build these plants. So it's going to be a tough one, I think. But look, the world is changing, and maybe U.S. Will look to Canada. Canada, has done actually fairly well in this trade war. Our stock exchange is actually, when you take into account the currency, is outperforming the U.S. And we're doing all right. So it's a possibility. We'll just have to see how that plays out. But the fact of the matter is that it's a very capital intensive, risky business. So we'll see. But it would certainly be something to give the industry a boost, and one can only hope that the ball bounces our way on that.
Ted, what's your feeling with the U.S. markets bouncing so wildly in either direction? What kind of an attitude should people have in this environment?
One has to be cautious of the headlines, for sure. The interesting development, I think, right now is that China's economy appears to be improving. That's according to Richard Bernstein over at at his firm. So I think it's important that people realize that we're heading to a new environment, Jim, of more bouncing around. That we're no longer, and I call it the old boy playbook, boy being Bernanke, Obama, Yellen, okay, where the Fed was there suppressing volatility. I think you're seeing a change. I think you're seeing a Fed that's not quite sure what it wants to do, but at the end of the day, it's going to try and create more goods inflation. That will increase volatility. That's the opposite of what happened under Bernanke and Yellen and Obama, where it was asset price inflation that was winning the contest in terms of where the money was going. If we see a switch into the real economy inflation, and look, we're not there yet, but that's where I think policymakers are going to try and push it. You're going to continue to see those bounces. So basically, Jim, it's get used to it. That's the new name of the game. But, look, active managers, stock pickers, active traders, they're going to love it.
Is this a time where being passive and just sitting back and watching is dangerous?
Not necessarily dangerous. I think it all depends on what your expectations are and your time horizon. So, there's nothing, wrong with sort of a long-term horizon if you're young enough to put money in the stock market and look for low-cost solutions for doing that. But, depending on your age, it's a different story and what your objectives are and what your style is. So, that's a pretty complicated question that I think every individual has to evaluate for themselves. I think the important thing, Jim, is that we're moving into a different period, a more volatile period. I'll be surprised if we see the VIX going back below 10%. The VIX is the volatility index. Could it get there? Sure. But, if it gets there, it's just another failure of the central banks to do what they say they were going to do and get 2% inflation. Look, this is and that's their target. It's not my target. They've put it out there, not me. And look, when the Bank of Canada ends up being like one of the the most successful banks in the world because it's one of the few that's actually met its inflation target. I mean, how bad does that make the Fed and the ECB look? My goodness, if the Bank of Canada can get to 2%, now mind you, we've had to go through, some housing hyperinflation to get there. But, seriously, is the Fed really going to take its inflation mandate seriously? And if it's not, well, yeah, okay, then we'll be going back to QE and I don't know, $100 billion a month in bonds and, we'll have zero 30-year bonds in the U.S. and negative bond rates in Canada. If that's what Jerome Powell will call a success, then fine, and then we'll have the low volatility game again, and everybody can pile into passive indexes and not worry about it. But somehow, I think we're seeing a sea change, and I think we saw it when Europe changed its leadership around the last G20 meeting. So let's see what happens over the next 2 months. It's a really fascinating time to see policy develop and how it's going to impact stock markets and investing strategies. It's a real big deal.
Ted, thank you so much for chatting with us.
Well, thanks for having me back.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca. His website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.